We are Keys and Gears, the podcast where we give you the keys to real estate and the gears to get you there.
We break down what's really happening in the Dallas market.
And we give you straight talk that helps you buy smart, sell wise, and live well.
Let's roll.
Welcome back, everybody. Today we're going to talk about a hot topic, and that is we're in July of 2025, and we're going to talk about, with Bess, our local real estate expert, is Dallas still a seller's market as it has been for years now? So, Bess, enlighten us. Where are we? Should we all be rushing out to buy a house now?
Oh my gosh. Short answer is it is less heated and more normal.
I love
Is
that
that an
answer.
unsatisfactory answer?
No, you should be like the Fed chair. You know, you really did that very well. You did a politically correct answer.
Oh my goodness. Well, it's the truth.
Because you hear these statistics, and I always think to myself, what good does it do me to hear that prices in DFW have dropped by X percent? It has nothing to do with Highland Park is going to be completely different than that number, right? East Dallas is going to be totally different. Richardson is going to be totally different.
Absolutely.
Frisco is going to be totally. These numbers are pretty meaningless when you look at the averages. You've got to look at the neighborhood you're shopping in.
Right.
What's happening there? And you really can't do that unless you have a pro who can pull the numbers and say, okay, here's really what's happening. So,
may I share a stat with you to totally blow your mind? And you too, America.
yeah.
And that is United States of America, a year-over-year average inventory, homes on market or whatever, is about 4 million a year.
Right.
So if you take over the entire year, there's about 4 million homes that come up for sale. Okay, no matter whether it's a hot market, cold market buyer, whatever the buzzy headline is, it's about 4 million a year. Well, how is that possible? Because sometimes the market is hot, and sometimes it's cold, and sometimes interest rates are low. So because of the D's of real estate, right?
The 4 Ds.
The 4 Ds. Divorces still happen. And
diamonds are still happening.
And
diapers are happening.
Diapers are happening.
Death is happening.
Death is happening. So that results in about 4 million homes coming up on the market, no matter what.
No matter what.
All right. So right now we're at, what is it? For the entire United States of America, we're at like 5,237,000 homes. Okay. So in 2020, when it was crazy town, we were like, 4,200,000. It was something like that.
Yeah.
So are we up? Yes, but is it crazy numbers?
And is it affecting the prices, right? So in some neighborhoods it is, and in some price points, it goes more hyper local than just your neighborhood. It goes into price points. It goes into the build quality of the house, and how long, if a seller is unreasonable in their price expectation, and their neighbor puts their house on the market, they're going to base it on that neighbor, right? And so it kind of perpetuates itself, and we move in a herd, and all of a sudden that whole neighborhood is completely priced wrong for what the buyer is expecting.
Well, and what's going on right now is I think a very positive thing, and that is because the interest rate shift from the ridiculous once-in-a-lifetime rates that they were at to now a more normal rate, a more historically normal rate. Let's say it like that.
Yeah, right.
It is forcing both sellers and buyers to be more mindful of their purchase, and I don't hear that as a downside. Buyers are not just writing a check just to get keys. They're being much more discerning about which keys they are earnestly searching. Now, does multi-offer still happen?
Yes.
Does 0 days on market still happen? Yes. I, myself, as a real estate professional, I have listings that run the gamut. And that is, I I had a listing in a very niche neighborhood, going back to Mark's deal about its hyper local, in a very niche neighborhood. They had made excellent refresh decisions. Within 72 hours of going on the market, we were looking at multiple offers all over list price. Now, we did list, as Mark is saying, we listed smart, and that is we did not stretch the price. We looked at homes that had sold recently, as in, let's define recent, within 60 days. Because this is a shifting market, you cannot go back 6 months. Any professional or any consumer that goes back and looks at Zillow from 6 months ago, that's a totally different market because we are shifting constantly. So you look back the last 60 days, look at similar condition. Are the bathrooms from the 30s or are the bathrooms from yesterday?
It's not a simple answer.
It's right. And so we priced, some might say somewhat conservatively. I don't think it was outrageously conservative.
Right.
And now it actually sold last week, and we were $20,000 over list price.
Yeah.
Again, that was in 72 hours. I have a listing that the seller has something in their head. I still don't necessarily agree with the price.
Yeah. It's probably,
And it's been sitting a minute. And on top of that, it is in fine condition. It is not in A+ Architectural Digest magazine worthy condition. The price is magazine worthy condition. So we have a bit of a disconnect there. And the consumers are responding by looking at it. It gets tons of likes, but we have not received any offers yet.
And also, zooming out for a minute, as a buyer, you have to think also about financially. Since I'm the finance guy, I got to think about these things. So I had a conversation with a younger couple the other day, and it went along the lines of, well, we're waiting for two things. We're waiting for prices to drop because the media keeps telling us prices are going to drop. We're also waiting for lower rates. Rates are going to drop. I said, okay, let's play that through, right? And so one answer I asked him, I said, look, would you be more interested in putting $1,200 in your pocket every month right now, or would you rather have the opportunity sometime in the future to save $225 a month? Which one do you want? Do you want the opportunity to save in the future? Maybe $225, or would you rather put $1,200 in your pocket right now? And they were like, well, of course we want to put $1,200 in our pocket. And I said, well, that's the difference between, a $350,000 house today versus when it's a percentage point lower in interest rate. The savings are $225, which is nothing to sneeze at. Right, that's a lot of savings, but in the meantime, you've missed out on $1,200 a month.
Agreed.
So that adds up to a whole lot more money than maybe if rates are dropping, saving $225. You know what's happening in the market right now, which is a 40-year average of 4% appreciation. So 4% appreciation on a $350,000 house is about $1,200 a month.
And I think that's where,
no matter what the market does, it's 4% average.
Agreed. And I think that's where people sometimes fall into the trap of thinking real estate is an investment, because it does sort of operate like stocks and bonds, and that is any good financial planner, which you have been a financial planner, will tell you can't play this shortcut. Trying to guess stocks and bonds, you're gonna time the market, you're gonna lose.
Can't do it.
But if you play the long game, right, the stocks,
you take the good with the bad, and it will average out to. I always say this on this podcast: owning a house is a forced savings account. It's not an investment. It's a savings account that is also giving you other benefits besides being a savings account.
Right.
So if you're waiting for prices to drop, great, because every $10,000 right now probably saves you about $60 a month, right? So that's great if prices are dropping, but can you time that? No. But in the meantime, you're missing out on thousands of dollars every month that you could be saving.
Right.
And so you're trying to time the market. You're penny wise and pound foolish. You're looking at the wrong ball. And so, and some neighborhoods are appreciating much more than 4%, by the way, to this day, still in this market.
Yes, and that goes back to the old location.
Exactly.
But also I'd say it's almost location condition, because when interest rates. So right now, you can talk about this better than I can, but I'm hearing from my buyers, oh, well, we have this much money in the bank account. We've been saving, but we want to spend this much to buy down our interest rate. So therefore, they are cash poor when it comes to post keys day, post closing day. So they really want that house to be that much closer to right. They have much less tolerance than they did back in 2020.
Because the affordability, yeah, absolutely, 100%. And and you have to think about what happens after closing. You can't put everything, into one's better than the other. It just depends on your personal situation, and but my main point is if you want to wait, you end up being priced out of the market eventually,
For sure.
And you just, there's never a good time to buy, right?
Or maybe there's never a perfect time to buy.
You're right.
It's just time to buy when you're ready.
It's just something, most of the wealth in this country is based on real estate, and there's a reason why. So, anyway, it's seller's market, buyer's market. To me, it's keeping your eye on the wrong ball. The right ball is, should I financially be doing this right now? Mm-hmm. Do I want to do this emotionally? Is it going to benefit my life? Is it going to improve my life by owning a house, right? Those are the questions you need. And forget about, is it a buyer's market or a seller's market? Really beside the point.
It's beside the point.
This is a major life decision for you that should have financial and lifestyle benefits to your life. That should add to your life. So that's the questions you need to answer, not if it's a buyer or seller's market, because that's going to change every single month. So just put it out of your mind. Go with the flow. Anyway, enough of that. So what are today's crazy pictures in real estate?
My crazy pictures of the day. Let's talk about this.
Oh, wow. That looks fancy.
Check it out. The Gone with the Wind.
What is that called?
Staircase.
Yeah.
Is back in vogue. This is a new build, a recent build home. It's for sale for over $3 million in the Frisco area. Okay. Salina, Frisco, right there on the border.
Yes.
Or Prosper, Frisco. Well, it's up there.
Okay.
North of Dallas. When I say up there, when Mark and I say up there, we're talking about north of Dallas. What I thought y'all would find interesting and why I brought it is all the different things going on that people often ask me about. Number one, wood paneling or wood moldings. Is that a trend? And that's one of those things. Quality is trendless, and as you can see here, it's fantastic. It's the picture frame paneling, and they've done the whole entire 2-story entry, and you can see it really adds. What I think is interesting and maybe trendy is that little painted black detail. Yeah. That is the first time I have seen that. It's interesting how it mirrors the staircase itself. As you can see, mirrored, meaning we've got the flat banister here.
Yes.
And you get the flat above the double entry.
It's like if you walk into a room and it has an area rug, it defines the area, right? So that line to me defines first floor, second floor.
And you can see how the designer picked up that defined black line in the chandelier that was chosen, because you see it also has those angular lines, and it has the black line on the. So this is a great. Just be consistent in your design choices. That in itself is a trendless
and the simplicity,
hallmark, design hallmark.
Simplicity,
correct,
is king.
Now, does Bess? Is Bess a fan of any of this?
Right. No, that's it.
Bess would not have any of this in her house.
That's your personal flavor,
but that is very true, very true. But as far as just some good overall design basics, this is a good execution of that.
Keep it uniform, keep it simple, right? Keep it timeless,
consistent,
consistent. Use natural products. that are not trendy, but that that stay relevant for a long time.
Correct.
So, yeah, that's beautiful. Gorgeous.
It's fantastic. And same house.
Oh, wow. Look at that. Yep.
Here's another little luxury level detail. Expect to see it tripling down because it is really gaining in popularity. And that is, first off, the his and her closets,
Yep.
left and right.
Yep.
We got his and her closets. That glass panel is actually
Shower.
the shower.
Yeah.
So behind that beautiful tub is actually you can see the double-headed
Yep, double
shower
head.
right
Yep,
there.
yep.
That is becoming more and more a standard expectation. Again, this isn't a over $3 million house, but I've seen it. You have too.
Yeah.
All the way down to $1 million.
Right.
And so it's coming quick because it really adds. It's a simple way to add great luxury living to your everyday.
Little bling and wow to your bathroom,
Mm-hmm.
right? Yep.
Exactly. So beautiful.
Love it.
Fun.
Good-
and you
good
notice again,
suggestions.
the colors are neutral but not cold.
Right.
And this one does in fact have a touch of gray to it. So those that think gray is a neutral, yeah, it can be a neutral. They've warmed it up with some of their design choices as far as it's not totally sterile white.
Yes.
But again, it is neutral. You could add any sort of accessory to that and it would look fantastic.
Very well done. I like it.
There you go. Things done well are good.
Yes.
I don't know if that's a
You'll get your
very
money
correct
back.
sentence, but that's what we've got right now. All right.
Well, there you have it. Another episode of Keys and Gears in the books. So
Ta-da.
join us next time, and you'll see what the topic is. We'll see ourselves what's next. So.
Love you, mean it.
Bye.
Bye.